Welcome to CoreLogic RP Data's update on housing market conditions for August 2015, brought to you on behalf of Credit Union SA. It was another strong month for capital gains across the Sydney and Melbourne housing markets in July, with dwelling values moving 3.3% and 4.9% higher over the month. The latest month of growth, as well as the large number of new dwellings that have been constructed, has pushed the overall value of Australian housing to just over $6 trillion. Across our combined capital city index, dwelling values across the nation's capitals have increased by 4% over the past 3 months and by 11.1% over the past year. The annual rate of home value appreciation has been accelerating now since March and is almost as high as the previous cyclical highs recorded in April 2014, when values were 11.5% higher over the 12-month period. Sydney's annual rate of growth at 18.4% over the 12 months to the end of July was the highest on record since 2002. While growth conditions in Melbourne and Sydney have been extreme, the remaining capital cities continue to see a much more mild rate of growth. The third highest capital gain across the nation's capital cities was recorded in Brisbane, where values were 3.9% higher over the past 12 months. Darwin values have shown the most substantial correction over the year, down by 5.3%, and Perth values are also down, having moved 0.3% lower over the year. Detached housing has continued to outpace the unit sector for capital gains across every capital city except Darwin and Hobart. Across our capital cities index, house values were 11.6% higher over the year and unit values were 7.2% higher. The gap between house and unit performance is the most substantial in Melbourne, where house values have risen by 12.3% over the past year, compared with a 4.8% rise in unit values. The underperformance of the unit sector can probably be attributed to the large amount of new unit supply that has flown into the marketplace over the past year, as well as the upwards pressure on vacant land prices that is pushing house values higher. One of the factors driving values higher in the larger cities is the short supply of homes available for sale. In Sydney, we're currently tracking approximately 18,150 advertised property listings, which is historically well below average. To provide some context, in late 2011, when market conditions were relatively soft, there were about 40,000 homes available for sale. Conversely, in those cities where the housing market is weakening, listing numbers have shown a consistent rise. With listing numbers remaining low in Sydney and Melbourne, together with market demand remaining relatively high, buyers have been faced with some urgency in their decision making, which is another factor driving prices higher in these cities. Sydney homes are selling in just 26 days, with Melbourne homes selling over a slightly longer time frame at 34 days. The remaining capital cities are taking more than 50 days on average to sell, with Hobart and Darwin the longest at 70 days. Another indicator of ongoing market strength is clearance rates. The success rate for capital city auctions has slipped from the high 70% range to the mid 70% range during winter. However, that's still historically a very high rate of clearance, and the moderation is more than likely seasonal. Adelaide's housing market recorded a 1.1% dip in dwelling values over the month of July, taking local values 0.2% lower over the first 7 months of the year. Adelaide home values have increased by 3.4% over the past 12 months, comprised of a 3.4% rise in house values and a 3.1% rise in unit values. Adelaide rents have remained virtually flat over the past year, with house rents increasing by 0.4% and unit rents up by 0.3%. The sluggish rental markets have seen gross rental yields across Adelaide slip a little further to register at 4.2% gross for houses and 4.7% gross for units. The housing markets around Australia are as diverse as ever. While markets are booming in Sydney and Melbourne, they're correcting in Perth and Darwin. Across the regional areas of the country, we're seeing coastal and lifestyle markets broadly bouncing back in value as buyer demand ramps up after a long slump, while towns reliant on the resources sector are moving through a downturn. The diversity in the housing market highlights the different growth drivers that are evident from region to region. The economies of Sydney and Melbourne are relatively sheltered from the downturn in the resources sector and are benefiting from a very healthy services sector, while the mining states and territories are experiencing softer economic conditions and a wind down in population growth. The increase in the rate of growth across our combined capital cities index is likely to be causing some concern for Australian regulators, such as the Reserve Bank and APRA, who would have been hoping to see an opposite trend, a slowdown in capital gains in line with tighter lending conditions around investment mortgages. The annual expansion in investor-related housing credit has continued at a pace that's higher than APRA's mandated 10% growth per annum, with June figures from the Reserve Bank showing credit for investment housing has increased by 10.9% over the year to reach its highest annual level since 2013. With many banks now placing a premium on investment mortgage interest rates, while also looking to slow down their pace of investment lending, we would suspect that investors will start to comprise a smaller proportion of the market going forward. The cumulative effect of tighter lending conditions, more expensive mortgage rates for investors and lower yields, as well as natural affordability constraints and higher levels of new housing supply, is likely to dampen some of the exuberance we've seen across the Sydney and Melbourne housing markets. Additionally, listing numbers are likely to start their spring climb over the coming month, which will provide a timely test for the housing market's strength through spring. Once again, thanks for tuning into our housing market update. For more information on your local housing market, you can visit our corporate website at www.corelogic.com.au.